So what about people who say, and I'm just really, this is like, I didn't realize when I first started talking to you, but this has just become a catalog of everyone's existential fears right now, which I think honestly, like, fine. Like I'm happy to talk about kind of the darkness that we're all thinking. And I feel like one darkness that is kind of clouding everyone's mind is like, what if this is forever and we never get normal life back and the economy never recovers? And it's like, everything is unrecognizable. How do I plan for that?
Oh man. I mean, if you really believe that, then the stock market is probably not going to be for you.
Yeah.
And that's just the truth. And the stock market doesn't have to be for you.
Yeah.
Right? Like if you really believe that, then you probably want to invest in something like a home, right? Or in real estate, something that is going to be more tangibly valuable to you. But I think that the more important question is like, is that realistic? Because we have to weigh potential outcomes with what's the likelihood that that outcome actually happens. And in fact, I think that what we're seeing with the market, again, with the market, what we've seen is that it's not really taking the dip that we kind of expected, given how dramatic the downturn has been in the overall economy. And I think that some of the reason for that is because people really do believe that within a year or two, things are going to get better. Because really the stock market is nothing more than an expectations market. And we can dive more in.
Someone was like, it's a chart of rich people's feelings.
Yeah, I saw that on TikTok and it's so true. It's so good. And maybe actually even that's worth exploring a little bit, understanding why that is so accurate. It is a chart of rich people's feelings in the sense that what is driving stock market prices? And this is helpful in just understanding volatility in general and understanding why the stock market is so unpredictable on a day-to-day basis. What is driving stock prices is people buying in or bailing out of the stock market. It's really nothing more than supply and demand, which I think people lose sight of because what you hear, like if you were to turn on Squawk Box or CNN Money or any of that, like,
Squawk Box, the most appropriately named Squawk Box.
So bad. Right? Like
really the worst name for anything ever.
And so like any of this cable news programming, right? That is like doing this nonstop talking about the stock market. Like what they will say is something like this, like COVID-19 happened, so stock prices are down. Or maybe they'll say like consumer spending is up, so stock prices are up. Or maybe they say like Saturn is aligned with Venus and it's the third Thursday of the month, so stock prices are down, right? And like it sounds right. They do a very good job of selling it, but there's actually an added step in there that they're just glossing over because it doesn't make a good headline. And it is, okay, so like let's say consumer spending is up. And so that is one factor amongst many millions of factors why people feel better. So they're buying into the stock market more. And that increased demand is what pushes stock prices higher.
Right.
And so what we lose sight of is that stock prices are a thing that is for sale, just like anything else that is for sale in the economy. It just happens to be these teeny tiny little slivers of ownership in a company. But the stock market is nothing more than a market for these stocks where supply and demand are what actually gives something its price. And what's particularly interesting is demand, like how much we want something or don't want something, because the supply of stock actually doesn't change all that much. It's very hard to create or destroy stock, or it doesn't happen that often, I should say. And so our demand, so how much people are feeling good about things or bad about things, is quite literally affecting the prices of stocks. And even more than that, what we see is that future expectation is baked into the price of every stock, because you would only buy an investment if you thought it was going to make you money in the future. Right. And so if people are right now holding onto their stocks because they believe that things are going to get better in the next 2 years, that's what keeps stock prices elevated. And we may be seeing that that is particularly the case right now because, to be totally honest, rich people have gotten away pretty unscathed with this particular crash. With COVID-19, what we've seen is the people that are bearing the brunt of it are people, working class people. Also, it is people who are in highly visible industries. And so what we have seen is that like it feels extremely bad, and it is. The unemployment numbers are horrifying, but bars, restaurants, massage parlors. Wait, massage parlors. Who says massage parlors? What do you call them?
Nail salons.
Nails.
Massage parlors.
Like what is this? The 50s? Sorry about that. Spas. You know, whatever it may be. Like these types of businesses are very visual. Travel is a very visible industry, and they are taking a really hard hit. But a lot of people who had computer desk jobs have gotten out of this more or less unscathed, at least for now. I think that we're probably going to see a few more waves and
of the pandemic,
of layoffs, of economic downturn. I think that we may, I mean, who knows? My prediction is as good as anybody else's prediction about this. But I think that when we see corporate earnings coming out, quarterly earnings coming out, and we see that companies really have been decimated on a profit level, that may reflect in the stock market. We may start to see more layoffs of higher level employees within these firms, which is something that happened pretty instantaneously during the last crash in 2008. So it affected people in every economic strata, as opposed to where with this one, at least right now, what we are seeing is it really hasn't impacted rich people all that much. And so again, coming back to the point of like the stock market is just a graph of rich people feelings. Well, that's not actually that inaccurate.
Right.
It's actually pretty dead on. And so again, your question was about like, what do we do if we think that nothing is ever going to be the same? I think that it's important to be realistic that like for a lot of people, aside from the quarantining, things are the same.